in the spirit of, you guys, for those of you here for the first time, I just got back from the Olympics. And one of the things that I just love is how proud each country is about their country, their flag. So what we always do here is we honor our flag, we have the honor guard coming, and we're going to do the Pledge of Allegiance.
Conclusion as to what you think the highest probable outcome is. And I can tell you that if I were to just, or myself or Jeff, if you say what is definitively going to happen to interest rates, I have absolutely no idea.
Welcome, boys. Welcome. State of the Union. So, let's start with Chris. You just got done seeing George's presentation.
The more it depletes our civilization. So that's why I don't invest in oil stocks, I invest in oil wells. And Mike Maselli will be here to talk about how you invest in oil. But the tax advantages of investing in oil as a producer is a lot better than stocks. I don't touch stocks. And the other thing is my concern with energy right now is that if it gets any more, when I'm watching Biden, his first move, not trying to be political, but you can always watch what the person does, not what they say. So Biden's very first move is a Marxist. Watch their actions, not their words. So his very first move, the moment he comes into office, was to cut the Keystone XL pipeline, runs from Canada to the Gulf of Mexico. And I was selling oil in those days for $30 a barrel. So under Trump, oil was $30 a barrel. The moment Biden comes to office, it went to $130 a barrel. And immediately, again, he's a Marxist, not by his words, but by his actions. What he was doing immediately was to crush the middle class and poor. Immediately. So he talks about inflation and all this other stuff. It's the price of oil. So that's the thinking. And so the price of oil goes up, and it creates a divide between rich and poor, which is Marxist. When you see all that, just watch what they do, not what they say. And then he and Gammon take the border wall down, Trump's wall, and people stream across the border, which is killing our cities right now. And so we're in serious trouble because, as we're going to talk about this, every one of you should read this book called The Communist Manifesto. And you'll find out that most of our academics are communists. My whole family are academics. They're Marxists. So what they believe in, number one, is the abolition of private property. Someday you'll own nothing, you'll be happy. The other one is workers of the world unite. Labor unions. My poor dad is at the teachers union. Today, the biggest union in America is the NEA. It's not National Education Association, it's National Distortion Association. And they just keep going on and on and on. But we've got to understand that we have communists running the show. So what this book talks about here is in 1930. It's only 50 pages. But I had to read this book when I was 18 years old, as I went to military school. And once I saw that, I realized that communists, Marxists, hardcore, are teaching kids. And the first school that brought in Marxists was Columbia's University's Teachers College in 1950. So look at the history, the state of the Union is we're becoming It's really funny because, and she's going like this, and Trump goes, and here's our border czar. She's fearless. I just crack up. That's the state of it. Well, I'm crystal clear on your position.
Yeah. Russ, how about you? Like, I know you study charts, and you know, I've had you on our podcast a lot.
After that, we had the whole COVID thing, which Chris was the first guy to call and say, this COVID thing could be a big deal. And then we did that whole crisis investing series, which was trying to understand that. And then as you continued to dig deeper, it was like, okay, this thing, British domination of the world, the United States domination of the world. I don't think it's a stretch to say that we're living at a time where there's a big power struggle going on. We've been at war, an economic war, people trying to dethrone the dollar, break U.S. hegemony. And you might think, oh, what does that mean to me? I'm just a guy down here trying to make it. It affects your interest rates, it affects your credit markets, the value of your currency, the velocity of your money in an economy, the availability and price of energy. And in some cases, it actually affects your ability to pick the person you want to be and receive power. And I think right now we're seeing that battle going on. So we need to continue to mind our own business in Main Street. I think that's super important. But we do need to pay attention to what's going on at the highest level so that we can see what's coming sooner. Because George is talking about being able, I call it read and react. You got to be able to read and react. And Chris talked about decision making this morning. And your ability to be able to assess a situation, figure out what the probabilities are, have a plan B, know what the plan B is. You don't want to figure out the fire escape, when the house is burning. And that's why we're here. You open up, no, it's not. We don't know. We're just trying to figure it out. But I think I would encourage you, even though we don't like to talk about politics, I think, not politics, but policy. Nobody cares. I hope this comes out. Nobody cares what you think, right? Kamala Harris is going to call you up and say, what do you think? They do a focus group, but it's all theater. You get to vote, you should. But at the end of the day, it doesn't matter what you think, it matters what they think. Because how they think and what they believe affects what they do. And what they do affects the results they produce. And the results they produce affect every single one of us. So we have to understand what they think. Like Robert is keep talking about, you have to understand what they think. And you understand what they think by what they do. That's a reflection of it. Then you know what's coming, and then you're able to react. So I applaud all of you for being here. I know it's heavy stuff. I remember when I was on the front end of my learning curve.
But what you can focus on is your balance sheet and your capital structure, right? And how can I set up my balance sheet right now so I can maximize on whatever opportunities we see in the next year or two, right? And I mean, this is something that you did phenomenally well back in 2008, 2009. You were super focused to make sure your LTV was at the right point, that you streamlined your expenses, make sure that your outgoing was airtight, you got the right people in, and then you built up your cash position in order to take advantage of these, and that's where you made all your money. That's why you're flying a private jet right now. Right? I mean, that's the honest truth. So maybe, Kenny, you can tell us about how you're setting up your balance sheet and your capital structure right now as an entrepreneur and as a real estate investor to make sure you're maximizing on whatever we see over the next year or two.
Okay, thanks, George. I'm going to flow up to multiple advisors, and then they, because not you, need to manage it. That's the system. Same thing with a bank. So at a bank, when you put money into a bank, it's a liability for the bank. It's an expense for the bank. They owe you interest on your money. It's your money, but they actually owe it to you in the form of an interest payment, right? That's it. It's still yours. Hopefully you get it back. George went to Argentina recently, and they could only get $40 out a day. That's when the banking system's broken. But in the U.S., at the moment, it's not. But that's the system. So the system is set up to basically get everyone's money. And then it's also set up so that you all believe that you can't manage it yourself. And so it gets invested by the pension funds, it gets invested by the insurance companies, and those are the people that I go to. So I'm actually getting debt and equity from pension funds, from insurance companies, from banks, even the government. And that's probably not yours, it might be though, but it's probably printed. But the reality is that's where we go. We go just like anything. And then the reason why we've been successful is because, to George's point, I think I asked my partner yesterday, he was here, and I said, what's our loan to value right now? And I think it's somewhere in the 50s. You know, and that's kind of where we have about, I'm not exactly sure at the moment, maybe 8,000 or 9,000 units. And our loan to value is in the 50s. And the deal we just bought in Las Vegas is in the 50s. Now, we would have gotten more if they would have given us more. But the reality is, now you got to look at the pricing between debt and equity. So debt is supposed to be less than equity. In other words, like debt's 5 or 6%. Equity typically is a little more expensive. And then the combination of those two is what we call the blended cost of capital. So that's essentially it. And then that gets paid by whatever you're investing in. And that's what everybody lost. You know, in the last few years, they would realize all this money that they were getting, they started borrowing at 10, 12, 14%. And you know that the real estate actually has to pay that. And the only way that money will ever get paid is if the market keeps going up. So that's what corrected everyone. And so, you know, the lesson should be always fix your debt, low loan to value, cash flow in bad times. Even when the economy shut down, my partner and I are like, holy crap. Like, are we going to get rents in May? Remember, I don't know. Like, you know, I got hundreds of millions in debt, and we have all these apartments, we have all these folks that are all freaking out, and we're saying, geez, are we going to get rent payments? We didn't know. Obviously, then the federal government put the eviction moratorium on it just to sweeten the pot. And, but anyway, so we're sitting there going, holy crap. And so that's when we actually increased our cash positions. Was COVID actually for us was a big, wake-up call. We're like, I have 3 months cash, I went to 6, and I'm talking about operating cash, including debt, on every project we have. And that's actually helping me right now, right? Because things have corrected. And that is the right way to manage other people's money. And I think what happened is people believe that the prices are going to go up, and they believe that they can borrow these crazy numbers, and they believe that they're going to be able to pay it back with higher prices, essentially. And that is not the way the system, right now, it's not where we are. And so, like any cycle, it's going to weed those folks out, and it'll shake itself out. The good operators will be left standing. And that has been our philosophy from the beginning, George. And I tell you, it's really as simple as it should always just cash flow from the beginning.
It's like Martin says. He says it so well. Our good friend Jason Martin. He says he did.
And then I started back solving. So, like with the Trump assassination, within minutes, I was like, this smells bad, right? And so now I'm going to go searching. And I always start with the null hypothesis, which is it's how they said it is. And I'm going to try and prove that or disprove that. And my process is really simple. I find data, and it either confirms or refutes what I think is true. And I'm really rigorous about that. So if the data comes back and it doesn't confirm what I'm thinking, then what I'm thinking is wrong. Until I get better data or something like that. So that's my process. Now, this has been a really challenging time because business is always making decisions with imperfect information. You don't know if plan A is going to work out, or renters are going to show up, or what the Fed is going to do with interest rates or QE. We don't know. The thing that's really challenging right now, I'm finding, just found out that the BLS has been systematically lying about jobs, which we knew if you followed Zero Hedge and been very carefully tracking, that they've been systematically overstating and then quietly revising down month after month. And so that was just, that's putting the BS in the BLS, right? They're just like, full out. They were just out lying.
And it was like a million,
Taking out almost $1 million.
818,000.
Right? So, but where does that stop, right? Do we believe what they're telling us about GDP, about retail sales? What about the oil numbers that are coming out? Can we believe any of that? And so that makes it really hard. And so I'm really sensitive to the idea that this is a particularly difficult time to make business decisions, right? And at the same time, we're pouring in my business because I find this is actually an incredible, I'm facing insurmountable opportunity right now. Right? Because I'm trying to tell the real story as best I can, and you do the same thing. We're all doing that. And for whatever reason, the mainstream media, they're just cratering their revenues, cratering their viewership, and they can't seem to figure out how not to do that, which means there's just extraordinary opportunity. So I'm getting all kinds of opportunities now to expand that side of things. Same thing when it comes to, I have a registered investment advisory as well. And we have a very simple model. We'll tell you the truth, right? And it turns out that's a really attractive model for a lot of folks out there. And again, our competition is almost zero in this space right now. And it's just mystifying. But it's wonderful. So I actually think there's incredible opportunities. This is, to your point, Russ, this is an incredible shifting that's happening right now. And while that's happening, the people who are clinging to the old way are going to do everything they can to pretend like that's still valid, but it's not. And there's something new is being hatched, and we're in what's called the interregnum. That's the period of time. The old king is dead, and we don't know who the new king is going to be. So we're in that awkward power struggle because we don't know who it's going to be. And they say this every election cycle. This is the most important ever. This is the most important ever. In my lifetime. I mean, I really think the decisions between socialism and Marxism and darkness and something not that, something more positive and hopeful. And I'm really grateful people are waking up to that all the time. And so that's been our path, right?
We talked about this in the morning.
How many of you know who Jim Rickards is? And back to what you've been talking about with the light filter, when he says here, let me GPT, he sends it to me with his note on the front end. He says, Robert, something new for you worry about. I'm going through it because I'm just slowly studying it. But he says some things that are really shocking. That he says, a market crash is not the same as a banking crash.
Yeah.
He says we can all see a market crash. We can see real estate going down, we can see bonds going down, but we cannot see a bank crash. That's exactly what you were saying. And he talks about SVB, Silicon Valley Bank. It was the biggest bailout efficiency. And nobody talks about it. The other thing it says about GPT and AI is that you can tame a human. You cannot tame a robot. So once they take over, it's going to be accelerated. And then the worst part about it is accessible now to small actors, little terrorist group and all this. They can bring down our whole economy with that by using AI and GPT. GPT stands for Generated Pre-Taught Transformers. But when they take off, they just keep going here. And then, so it gets really into depth about it. But as he says, and I think I agree with him, it says, now we have something to worry about. And exactly what you're saying on the edge of it, the banking system, as we're talking at this moment, is crashing. Which
Yep, that's the swap spread. That's the swap spread. The banking that you're talking about, records.
Beyond my brain here.
Yeah. Like Russ was saying, you know, when it's supposed to be higher, that's what the swap spread are telling you.
But right now, and that's why I don't like financial. I mean, some people are financial planning, but it's that 60-40. You put 60% in stocks, 10% in bonds. It's the bond market's in question, and we can't see it. So we can't see the no bonds. They cannot be tamed. Once they take off, they take off. So it's really frightening information in this book. It's be out in about 2-3 months. But if you sit down to Ken A. it's worth reading. Thank you.
Thanks, Rob.
You either go under the 10-year and stay there for it sustained for maybe a month, 2 months, 3 months, and then you see the Fed drop rates. You know that's when you should be maximum risk off. And not 100% cash. And if there's a deal that comes up in an apartment complex, just like you're doing, you know, and it's a smoking, go ahead and do it, for heaven's sakes. But just be conservatively opportunistic, right? And then realize that over the next 6 months, that's usually the cycle when you see the downturn, and then expect us to come out the other side, and then expect those opportunities to present themselves.
Yeah, Rob.
The thing I'm watching right now is as we talk today, the interest payment from taxes on our debt is $1 trillion. Just the interest payment to pay off the debt. Now, who owns those banks is the question. So the $1 trillion going out, but we've got to the point where it's $1 billion, $2 billion, it's all this. So my question is, and every 90 days now, the Fed is printing another $1 trillion, Federal Treasury, another $1 trillion. So ask this question, okay? If I borrow $1 trillion now, and I'm going to pay back $1 of it every second. So I owe $1 trillion now, and I'm going to pay off $1 every second. How long would that take? 31,688 years. We're fucking bankrupt. That's what's happening. We cannot stop borrowing as our problem. So it's 31,688 years paying off $1 per second. And they're printing it every 90 days $1 trillion. The math isn't that hard.
Thank you, Robert. Say, Chris, you were way ahead of the curve. You know, moving upstate, buying the farm, getting into hard assets or primary wealth.
You know, you're gonna have faith in those bank reserves, and as long as the banksters of the world own the Fed, they're gonna have faith that Fed can deliver those bank reserves. But right now, the Fed is insolvent. They have negative equity. It's just basically an accounting gimmick that they have that reduces the liability side of their balance sheet by projecting out future income. And so, if any of us did that, it would be Enron, frankly. So it's not a balance sheet issue; it's more an issue of confidence. And I have no idea when this is lost in Central Bank.
Well, guys, we're